JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 26th of January 2022. So welcome everyone. Welcome to this Wednesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, of course, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which is also updated on a daily basis. So check us out here on jfdbank.com and click on the research tab right there on the top. So now then guys, jumping into the charts, so let's have a look at what's happening here with Nikkei, and we continue to decline a little bit here, however not significantly, not as much as we did yesterday, but still we declined. The only kind of positive thing here is the fact that we have, although we have broken the lowest point of August, we managed to still remain above it. So in a way, this area is proving to be quite an important one to watch. So long story short, basically, if this hurdle continues to provide support, yes, and in a way, we could continue seeing these breakouts, but at the end of the day, if it still closes above it, then yes, this could lead to something. So that's why be very careful, guys, and we'll see how it plays out then. But for now, yes, we could see a further move lower. However, like I said, keep your eyes on this hurdle, and of course, most important, keep your eyes on the Fed today. So we do have the interest rate decision. Now that's going to be quite interesting to watch. I think everybody in the market, every trader will be watching that. Of course, at the moment, the current expectation that the rate will remain the same at plus 0.25%. But of course, there are some elements of the doubt just because of how the Fed was expressing itself before kind of last week and before that, how all the vibe around the Fed was circulating that that they're planning to increase rates a little bit faster. However, let's not over-speculate on this. As I always say, whenever we have something like that coming out, wait for the news. Try not to kind of enter anything beforehand, because even sometimes, I mean, depending on where you're trading and with on which platform you're trading, and through which broker, of course. I mean, then whenever you, let's say, enter a position before, sometimes you might not have a fixed spread. So yeah, be careful with that, guys. The spreads might increase during these volatile times, so just be very careful with that. Now jumping into Shanghai Composite here very quickly. So yeah, the Shanghai Composite did correct a little bit higher, so that was kind of a good sign here. Again, to be honest, this was just a little temporary correction here, not really taking it too kind of, let's say, positively. I mean, yeah, we've traveled back above this lowest point of November, but can we go for a larger move higher here? Well, that's gonna, like I said, all that's gonna be after the Fed release. So keep an eye on the cash index of Shanghai Composite, and yeah, we'll see how that plays out. For now, I cannot say much, but the only thing that I can say is just to keep your eyes on the basically on this on the news today. In general, we have quite an eventful day. We do have the Canadian central bank coming out as well with its interest rate decision. So yeah, there could be a bit of movement here. I'll get to the Canadian pairs in a bit, but yeah, for now, coming back here to the Shanghai Composite, yes. The only thing we have to do is wait. Of course, overall from the technical picture, I'm bearish, but maybe a bit of a retracement here could be possible depending on the outcome. Quick update on the VIX. So yep, we pushed higher, as you can see here. I talked about this one yesterday. I said that my target is going to be this 35.32 zone, which we managed to reach. Perfect. Okay, good news. But now can we see maybe a correction here back down, back below this downside line, which we kind of violated a few times here. In general, to be honest, it's a little bit of a mess here with all these lines that I have. So let me just put this on the chart like this. One thing that you can keep an eye on, of course, is this downside line, this tentative downside resistance line, which got violated a few times. I'll keep this as an indication, because if we travel back below it, then yep, I could consider maybe a bit of a retracement here. But in that case, I mean, then maybe we could see the markets accelerating just for a little bit. So again, let's not overcomplicate things for now. Let's see how this is going to play out here, but it's just a good indicator. It's just a good kind of way to monitor the market as well. DAX, the German index, beautiful rebound from that so-called neckline that I was talking about yesterday, if you remember. So yep, we managed to rebound from this area. So that's everything right now so far in line with the idea that I talked about, and the idea was to see maybe this as a possible kind of maybe a bit of a complex kind of double top pattern here. So if you're looking for some further downside, a break of this neckline is needed. Until then, we will just maybe class this. We could see maybe a bit more correction here, maybe even going back to that 23.6% retracement of the Fibonacci right here, and which is roughly around that 15,270 territory right here. So yeah, keep that in mind. For me to consider maybe a larger move to the upside, I would need to see a push back above the 200-day EMA right here, and then yes, we could consider a larger correction here to the upside. S&P 500, very quickly on that one, and yesterday the session kind of ended in the negative territory, but as you can see here from this candle, kind of there was a bit of a battle between the bulls and the bears. We did at one point try to climb back above this 200-day EMA, however failed, and we stayed below that 200-day EMA. So as I've mentioned before, in order to kind of go for lower levels, we need to continue kind of seeing this one trading below that 200-day EMA. So far, yes, it's kind of leaning towards that. The cash index is currently trading at around 4,362 territory. So that's yeah, so that's slightly above where it ended yesterday. So yeah, guys, for now, let's see how this is going to play out, but I'm leaning a little bit more towards the downside still if the index continues to trade below that 200-day EMA. If market starts climbing higher and let's say over pushes above this barrier, this 4,417 zone, then yes, we could maybe consider a bit of a larger correction here to the upside. Dollar index, so slowly but carefully climbing higher, broke this downside line, and yes, this of course could attract more buyers into the game. Again, a lot of developments today, so I would suggest to keep an eye on it because this could change very quickly. For now, at this point in time, yes, everything looks a little bit more bullish than bearish, but again, let's keep an eye on the Fed today, and let's see if we can get this one rallying here again towards that 96.94 zone right here, somewhere around here, and then we'll take it from there. Silver, so silver, I've looked at gold previously, but kind of totally forgot about silver, so let me just refresh the chart here, and overall we can see that the commodity managed to climb nicely here above all of its EMAs at one point here, but this week it started declining and it fell back below the 200-day EMA. It's still trading above the above that 100-day EMA, that 21-day EMA. So in a way, kind of would say there is still hope for the buyers, and also the hope could come maybe near this upside line. If that's the case, now that's where basically we could see maybe a lot. For now, in the short run, we could see a larger correction here to the downside. But for that, for me to consider that scenario, what I would need is I would need to see a push below this little territory here, approximately around here, and then yes, we could go for lower levels. Now, some of you probably are already looking at this right here, this short-term upside line, which of course, yes, if it breaks, this could increase increase the chances for silver to drift lower. But I would prefer actually to stay to stick to this area, this 23.43 level, approximately around here, marked by the high of the 28th of December, and I think that's the highest point of December. Yep, that's correct. That's the highest point of December, and I could drop below it. At the same time, would place the price below the 21-day EMA, and in general below all of the EMAs. And then yes, we could consider this one as a larger correction then. But for now, yes, we are still hanging above this upside line. Yes, we're correcting, but that's okay. It's quite normal. The only thing is that in order for me to get comfortable with the upside, I would prefer to see a push above this 24.70 territory right here, marked by the highest point of the current highest point of January, and then yes, we could go for some higher levels. At the moment, I'm just, like I said, yeah, I'm just observing the price action here. WTI oil, guys. So this is quite interesting as well because we keep bouncing around here, and as you can see, I talked about this idea where I said that we need to wait for a drop below that downside line, below that this 81.94 level in order to go for lower levels. And yeah, so we are still not getting that, and as I said before, as long as it stays in this whole territory right here, I will remain neutral because it could continue bouncing around, so that doesn't really help us out here. Now, Ethereum, very quickly on that. Ethereum is, yeah, it has drifted lower quite significantly, and let me just grab some of these lines. So we managed to reach an area near the 2,160 zone, so that's, I would say, yeah, good news for the buyers because it was a decent drop here, and now we're kind of stalling here. My only little concern is that maybe, just maybe, we're kind of forming somewhat of a bearish pennant here, this little triangle pattern. So yeah, it could continue sliding, so be very careful on that side if you're a kind of a crypto bull. So because at the moment, if we kind of look at this, and actually let me just try to jump into a 4-hour chart maybe. Okay, so yeah, well, maybe it's not as ideally looking as on the daily chart, but here Okay, that maybe could change a little bit the game. So let me just have a look at this again. So looking at the daily chart, we're seeing a bit of yeah, a bit of a kind of a triangle here, so kind of a pennant, and altogether here is could be seen as a bearish pennant. But on the 4-hour chart, we are seeing somewhat that we call a potential diamond kind of diamond reversal pattern. But again, let's see if that's going to play out. I mean, it's not ideal, don't get me wrong. I mean, it's not a perfect one, so maybe it's not even that. So maybe I would rather just stick to the daily chart. Even so, guys, either way, if it's pennant or it's diamond, whatever, still a confirmation break is needed. So if you're looking for some downside, then at least wait for a drop below this little upside line, and a drop below the yesterday's low, which is roughly around here near the 2,349 zone. For the upside, I'll take a very conservative approach and wait for a push above the 2,651 zone right here, and then yes, we could go for some higher levels, or I should say, for a larger correction to the upside. Now, AUDCAD. So, AUDCAD is quite interesting as well, because as I said, today we have the Canadian interest rate decision as well. No surprises there so far. I mean, in terms of the expectations, we can see that the pair is trading above this downside line, so kind of good news for the buyers, could be. However, as I said before, I'll wait for a push above this barrier first in order to go for some higher levels. For the downside, I need to see a drop below the 0.8972 territory right here in order to get comfortable with further declines, guys. So keep that in mind. So basically, in other words, the same scenario remains valid. Now, USDCAD, of course, something to keep an eye on, because so far the pair is doing everything according to the rules that I said, that kind of the idea, the scenario that I mentioned, and for now, yes, we're having this hold up near this downside line, but I would rather maybe see this one dropping below the 1.2570 territory right here, somewhere around here, and in order to kind of let's say get a little bit more comfortable with further declines. The only thing is that I can say is that this pair could be a bit on the choppy side today. So because we have the Canadian interest rate decision, and then we have the U.S. interest rate decision. So yeah, that's where you can. If you want, of course, if you want to trade this one, my suggestion is have your stop loss in place and manage your risk accordingly. If you don't like these kind of days, then well, just better stay out of it, and just monitor this, and maybe after everything, when everything kind of settles down, you could take a position here and maybe and see what works better for you guys. But for now, just like I said, myself, I'm going to just observe this, because again, I don't really like to kind of jump around here with this when we have days like that, and in such pairs. So yeah, I rather just kind of monitor this one for now. Now, US dollar against the Turkish lira. Okay, so this one I've talked about a while ago, if you remember, and I kept on telling you that so far we are having a nice squeeze here. So after these crazy moves here that we had at the end of December and then beginning of January as well, so now yeah, the pair is kind of getting squeezed. I don't know how further it's going to get squeezed, but basically we're just keeping an eye on some of the levels here, potential breakout points. So for the upside, what I need here is to maybe see a push above the 13.93 level. For the downside, a drop below the 1.1313 area, approximately around here, could do the trick for a few more sellers. GBPNZD. So GBPNZD is yeah, continuing to push higher. We're continuing to trade above this upside line, and as I said before, as I mentioned before, that as long as this upside line remains intact, then we will continue aiming higher. For now, everything is kind of in line with that idea, but if you're looking for some more upside, I would say wait for at least a push above this 2.02 level, 2.0235 area, which is the current highest point of January. A nice good pop above it would confirm a forthcoming higher high, so keep that in mind. And our next target then, this is where I need to jump in a little bit here. Next target, of course, is the highest point of August of 2020. I do understand it's not far from where the potential breakout is, but yeah, that's quite a strong level here to watch. If that gets cleared, don't get me wrong, yes, we could continue pushing further north. In that case, my next target will be this 2.0476 zone, approximately around here, marked by the high of the 14th of May. So keep that in mind. So basically, a lot of things to consider here. I mean, if you're not comfortable with the upside here, because due to this kind of steep up move already, then of course the suggestion is to wait. Just wait for it. I mean, maybe we'll get that break of this upside line. Eventually, it will happen, but when well, basically we need to kind of wait until that happens, and then we could start considering maybe a bit of a retracement here to the downside. EURUSD. So I haven't looked at this one for a while, but what's interesting here is that, yep, we have ourselves a nice little rebound here from this area. Well, I wouldn't say maybe the area is a little bit lower, but nevertheless, after reaching the 1.03 territory, the pair did drift back up, and most importantly, did push back above that previous lowest point of January, near the 1.0327. So we pierced that through, but we failed to stay below it. So yeah, that kind of just draws us here a nice little kind of possible double bottom pattern. However, it's too early to talk about that, and because we need some sort of a move up through this area right here, through this 1.0492 zone or this 1.0512 area. So basically, in general, this area right here, in order to go for some higher levels. But we could already consider that scenario, or should I say, we could maybe aim for this area initially if we do climb and stay above this 21-day EMA right here. For the downside, pretty straightforward. A drop below the current lowest point of January near the 1.03 territory could do the job, and yeah, would confirm a forthcoming lower low. Euro USD. So finally we had that break, and well, we stayed below that 1.13 territory. So this of course raises concerns. This of course raises concerns in the bull block. Yep. But again, they might get saved depending on how the Fed's going to come out and how the dollar is going to react. So yeah, be very careful on this one. We could see even maybe a huge drop initially, so maybe a huge drop here maybe all the way towards this lowest point of November, but then by the end maybe it could straight away reverse back higher. So again, we've seen these scenarios happening before during these events, so be very careful, and yeah, as always guys, have your stop loss in place. So yeah, that's it for this session, guys. I hope you found it useful. Thank you very much for watching and listening. I really appreciate you joining in and watching this one till the end. So I hope you, like I said, you found it useful. If you want to catch me tomorrow morning, as always, at my Traders Espresso, that's 7 o'clock GMT time. For now, have a wonderful trading day. Stay safe, have your stop losses in place, and everything will be fine. Thank you very much, and bye-bye.